Hi everyone. I'll be sharing my thoughts on the recent equity markets fall for a few consecutive sessions. So there could be multiple reasons, starting with the sluggish earnings growth, corporate earnings growth, and the geopolitical tension, the tariff concerns by U.S. President, and then if you notice correctly, the FII is selling for last year also and continuing for this month also, and the weakening of the Indian rupee against the dollar, the um, absence of any progress on the Indo-US trade deal, and finally the budget also. So we'll be discussing in detail one by one, starting with FII selling. FII, foreign institutional investors, wherever they will get better returns, they will invest there, and that is number one. Number two, maybe the bond yields in US is more, so they might switch their money from equity markets to the bond markets in the US. And they have multiple markets. They have Hong Kong, they have China, they have Japan, South Korea, Taiwan, Thailand, Indonesia. So wherever they find better return, they will invest there. And finally, if you look at the weakening of the Indian rupee, once they sell, the net profit they might be taking to their home country is would be very less, because, for example, if they had invested when the dollar was trading at almost 80 rupees, and now if they are selling, dollar is at almost 90 odd rupees, so the Indian rupee has weakened, and when they convert their profits into dollars to take back to their country, that would give them less net profit. So that could be one of the reasons. And finally, the LTCG tax, the long term capital gains tax, which is 12.5% beyond 1 year. Many countries do not have this LTCG. India has it, so that could kind of dent their sentiments to invest in India. So these are the few reasons why FII selling has happened for few consecutive months at the net selling by FII in a particular year. But yes, the DII, domestic institutional investors, which are the mutual funds, the insurance companies, the EPFO, which is Employee Provident Fund Organization, and you have NPS, the new pension system. So all of these are called DIIs, domestic institutional investors. They are trying to offset the sell by the FII. That is one thing. But if you look at the DII buying, they're trying to catch, or they're trying to arrest the fall by the selling of FII, but they're not able to make it fully, because the FII selling is quite huge. And DII, of course, in the past also they have shown their resilience by buying Indian equities. But every time FII sells, we have seen in the markets on the daily basis, monthly basis, yearly basis, that DII buys, but they're not able to fully capture or arrest the FII selling. DII are doing a great job in showing resilience of the Indian equity markets, because this SIP inflow is quite huge. And if you look at the weakening of the Indian rupee in the past 1 year, and maybe continuing now also, so that has impacted the sentiment in the equity markets. and in the Indo-US trade deal, there is absence of a concrete deal, or there is no I mean, very what the progress is not that good on the Indo-US trade deal, which is also denting the sentiment of the investors in the equity markets. If there is some kind of progress on the Indo-US trade deal, that will again boost off the morale of the confidence of the investors. And finally, the budget is approaching very near, and investors are quite anxious to know what will be decided in the budget. And if you look at the corporate earnings, that has been quite sluggish. The number of companies, they have declared their Q3 earnings, quarter 3 earnings. Maybe some 100 and odd companies of the large cap and mid cap space have declared their Q3 earnings. That is quite muted. The revenue or the sales and the bottom line, which is the net profit or the profit after tax. So I mean, the earnings growth is worst in the last maybe 17 quarters, 17. So that has again dampened the sentiment of the investors in the equity market. So investors generally look for earnings growth. They look for month on month, year on year, or quarter on quarter earnings growth, the revenue growth, the sales growth, and even the net profit growth. If that is not visible, that is below 5%, that kind of impacts the sentiments very badly. So to boost the confidence of the investors, the corporate earnings have to really outstanding, outperform the growth. So that is one factor which is leading to the fall in the equity markets. So these are the few reasons, and one more is the tariff concerns and the geopolitical tensions. So let's talk about geopolitical tensions. See, starting with Israel-Gaza war, or the Russia-Ukraine war, and then you have the Venezuela president being airlifted by US, and then the social unrest in Iran, inside Iran, and finally the Greenland potential acquisition by US. US President Mr. Trump wanted to acquire the Greenland area, and some 8 European countries have come forward in support of Greenland, and Mr. Trump has threatened with fresh tariffs for the 8 European nations. So that again is quite uncertain, quite volatile, and people are very skeptical of the progress, what will happen, whether Greenland will be acquired by the US, because that's a very strategic location, and President Mr. Trump has said that he is acquiring not for minerals, but for its strategic location. If US is not acquiring, then maybe Russia and China will acquire that. So that, from a strategic point of view, that is very important, whatever he is mentioning. So that again is impacting or affecting the global sentiment in the equity markets. That's why gold is rallying. People are investing in safe havens. People are moving their money from equity markets to safe havens like commodities, gold, silver, and other commodities. So these geopolitical tensions, or global turmoil, or global uncertainties, whatever you call it, you and me, we don't know what will happen tomorrow, but these are bigger issues. The sooner they are resolved, the better for the equity markets of India and the world as a whole. So then tariff concerns always looms over the countries. So these are the few factors. So whatever we have discussed, I'll just briefly summarize. Number one is the sluggish earnings growth and the geopolitical tensions, the tariff concerns, the FII selling, foreign institutional investors selling, and then the weakening of the Indian rupee, the no progress about the Indo-US trade deal. So these are the few factors which is impacting the sentiment. And equity markets are not falling for the first time, or this has always happened in the past. Many wars have been fought in the past. So this is how the markets operate. This is how equity markets operate, and you cannot expect a linear growth always in equities. Here, if you take individual stocks also, those companies which have become multi-baggers in the past, maybe in 1 decade or 2 decades, in the process of becoming multi-baggers, they would have fallen almost 70%, not once, not twice, but many times in the past. But finally they have become multi-baggers, 1000x, 2000x, some becoming 8000x also. So this is quite normal. This is quite expected from the equity markets. Investors, those who are experienced, should not have any concerns. Experienced investor will not have any kind of tension or stress on this kind of falls, because this has happened multiple times in the past, in the overall index also, and in the individual stocks also. So this is how markets operate. This is normal behavior of the market. This is not anything one-off case or anything extraordinary. These are quite normal, and experienced, confident investors will not have any concerns on this. Even I'm an investor. You can't see iota of concern on my face. Of course, my portfolio is also down, but I know what would happen after few quarters or after few years. I know in the past, of course, the past performance is not an indicator of the future performance, but still then, if you have done well researched, well analysis on by looking at the fundamentals, by looking at the financials, by looking at the technical chart, and you have selected a very good company to invest, then you should not be worrying in the longer term. Of course, in shorter term there will be fluctuations, there will be volatility, but in the longer term definitely you will get the compounding effect if you are holding for the longer term. The normal disclaimer is this video is purely for educational purpose and not a buy or sell recommendation of any stocks that I have mentioned, or buy or sell in any index. You may consult your investment advisor before investing. Thank you so much.